Good morning, Kolkata. How do you call it in Bangla? You will know, right? How do you call it in Bangla? You would know.
No, I wouldn't.
Because Sundar sir is expert in all the languages. So many languages he can speak. And last time when I interviewed him in Hindi, he was talking in such pure Hindi. And after that I was surprised. He said he can talk in Sanskrit also. So, truly remarkable person. And I have known him for over 20 years. First when he was at NSE and when I used to be just a reporter. And now he's of course, the big man at BSE and changed the fortunes of BSE literally and made BSE a force to reckon with. We're starting the session. I have one simple rule, no mobile phones please. If any phone rings, then we give it in auction to the lowest bidder. So, let's have a freewheeling chat, sir. So, the hottest topic right now is what's happening with the derivative volumes. I think yesterday or day before we had the SEBI chairperson also talking about it. What are your thoughts? Because you have also led a bit of a revolution on the BSE side in those volumes picking up a lot.
Thank you. First of all, I want to thank everybody for being present here and being ready to listen to me. And I would like to thank the organizers for inviting me here. So the hot topic, what's happening in derivatives? See, a few minutes before somebody asked me, I made a statement. India is an old country with very young population. We say the median age is 29 years. A significantly large portion of the population is income earning age, and of that a very significant portion is in the age group of 20 to 30. GDP is growing, per capita is growing, disposable income is growing, so naturally people will look for avenues for investment and avenues for making money, which is very natural. At BSE, in the last 5 years, we have seen the total number of unique client codes going up from just 5 crores to 17 crores. So immediately we will think all the 17 crores are trading derivatives. No. Of the 17 crores, many of them I think are trading actually mutual funds. Around 1.25 crore investors are trading in equities market as per the latest data. And just 49 lakh individuals, I will not call them retail, 43 lakhs actually, the recent number, is what is trading derivatives. Then why the options volume appear to go up so much? Is it this 43 lakhs taking it to such heights? The question is actually, is it such height? The reason is we are measuring everything with notional volumes as far as India is concerned, and as far as external markets are concerned, we are looking at the premium as the contract traded. The contract sizes are small. Since the ticket is small, it looks very big. Futures Industry Association has published data which says, this data is from OCC. OCC clears derivatives for 17 registered exchanges in US. The total volumes at the largest exchange in India in terms of options premium of index options is just 43% of the comparable premium value in US. So the numbers which we have, it is 500 times of US, all that stuff, somewhere something is worried. All these are data. The data will make people to think about what they want to think. Is it true there are people in the market who may be trading options not because they know options, but because somebody told them it is easy to make money? Is it true or not? The answer is, of course, yes, it is true. There are lots of people, there are people in the market who probably do not understand options and who trade and therefore have every chance of losing money. The point is that's not true only for options, it's also true for equities, it is true for many things. But taking options into account because it has come into limelight, what are you doing about those people who trade options but who do not understand it? Education is one thing which we all try to do. As many of you may know, we have started introducing what is called as Dr. Mane videos, where the important underlying point has been, please don't believe what others say and start getting into the market. Don't expect short-term results and you want to become a billionaire overnight. It doesn't work that way. Those type of information which through a small clipping we are trying to propagate, apart from the 14,000 webinars we do, apart from the statutory warning when somebody wants to trade about the options trading. That is one investor education part. Because of these people trading without understanding what they are doing, is there a risk in the market? That is more worrisome, right? If the market goes down because of risk concerns, that it will be an irretrievable reputational loss for the country as a whole. So there are quite a few parameters that we have in place which are very interesting. Nowhere in the world you have online, real-time, client-level, portfolio-based margining. India is probably, thanks to the regulatory providence and thought process, we have it. Nowhere in the world probably you will have a risk reduction mode. When some broker has utilized 90% of his capital, he cannot take further positions. He can only reduce position. A limited point what I want to say is, in terms of, if you put it as 3 buckets as it was told 2 days before, one is policy aspects. That I will come in a minute. The second is education part and protection part. We are doing something, we can do much more. The first part is actually the risk part, there we are safe. As far as policy part, it is just not in our capability to say what should be done. But what I almost get more worried when I think about a policy overall, overarching is, more than derivatives, many other things worry me. When I meet the youth of today, they today talk about how can they trade crypto. That is absolutely an unregulated market. And when I open any app, I see so many gaming apps, to put it very differently, which lure people with immediate money. And the number of registers users there, I am hearing as 20 crores, 27 crores, 11 crores. When compared to 49 lakhs, that number being so high, it worries me as a citizen of this country as to how do we safeguard them as well. I am sure the policy aspects will take care of all this. So these are my thought processes.
Oh, absolutely. You know, as I had made a reel कि डॉक्टर बनने में 5 साल लगते हैं, इंजीनियर बनने में 4 साल लगते हैं, ट्रेडर सबको ओवरनाइट बनना है, सक्सेसफुल ट्रेडर. How many people in this room actually invest in stock markets? Okay, virtually the entire room. And how many of you actually do option trading? And how many of you consistently make money in options? That's a good number actually. That's not tying in with the 90% number that SEBI keeps throwing, that 90% traders lose money. Either this room is of course full of smart people, or there's something wrong with the data of 90%.
So probably this room is not representative.
Yeah. Good point. Okay, but one more point that I want to ask you. We have both seen the market evolve over the last 2 decades. The most heartening change for me personally is that there was a time when our market was completely dependent on FIIs. And if they would withdraw even 0.5% of their investment, the market would fall 10%, 20%, 30%. At global financial crisis, 58%. Has that now become a bit of a history? Now, with the kind of domestic participation that we have, and the best example was on the day of the election outcome, when 21,000 crores was put in by retail on one single day, when the market crashed. Does that take away that big risk for the market of that big corrections that used to happen earlier?
Wonderful question you have asked. In my younger days, I used to tell, if somebody sneezes abroad, Indian stock market will immediately develop 104-degree fever. No longer. You were talking about one day. You take about the entire period. There has been bouts of FPI withdrawal, coming in withdrawal. Market has not danced to the tunes. Why? It is because of the domestic financial institutions being very strong as well. Today we are talking about around 18 to 19 crore portfolios. We are talking about a significantly large number of SIPs, and every month the number of SIPs added are huge. So clearly the mutual funds are playing a very important role. How they will be able to play an important role? Our Janata Janardhan.
Yeah.
So that also clearly indicates where is 19 crores we are talking about and where is 49 lakhs, 43 lakhs. There is a clear demarcation. So the people, I am sure, are certainly looking into sort of safer investments like mutual funds, and therefore that in itself is a strong point, and retail is becoming more intelligent. The amount of availability of public information today, what stock exchanges and regulators have done, democratization of information, democratization of access, free access to information, because of which I think the retail public also today is much more intelligent, and they are able to get into the market when they feel it is an opportunity, and that provides a strong backstop for any issues that may come because of FPI withdrawal. I totally agree with that point of yours, and therefore it has taken away a significant amount of risk from the market.
Oh, absolutely. In fact, while this room might not be representative, but how many of you topped up your investments on the day of the result when the market fell 7-8% at index rate? Okay. And how many of you, be honest, how many of you sold in panic? Okay. But kudos to your honesty. In the entire room, only one hand went up, but cheers to that. You know, it takes guts to accept that, but good to see that. Good to see that that you know there's so many people who actually topped up their investment.
If I may say, that also shows the confidence of these people in Indian economy.
Yes.
When the market is going down, I am not going to panic sell. Probably this is an opportunity to purchase. If that's what this room says, clearly that shows the amount of trust and confidence they have in Indian economy and Indian policy makers.
How many of you invest via mutual funds in this market? Just mutual funds. Simply, no direct investing, just mutual funds. Simply giving you money. Okay. And equity plus mutual funds? Yeah, there's a lot of. And how many of you believe that Indian mutual fund industry, by and large, is doing a good job? Wow. That's another, you know, that tells you that kind of money that is coming via the mutual fund route. By the way, I invest entirely through mutual funds because I don't do direct investing. So I obviously have a lot of confidence in our fund managers. You have a lot of data. How is the demography changing in terms of the new the investors that have come in post-COVID? How many of them are like the ones who are starting their career? Like 20 to 24-year-old, and how many of them are like 30 plus? And what would be your message? I mean, what would be your message to the youth of the country who's investing, who's getting the first salary, and perhaps putting 20 to 30% of their salary in stock markets?
So as I told you, from a BSE perspective, in 2020 it was around 5 crore UCCs, and today we are talking about 17 crore UCCs.
No, I'm talking about the demography. The
entire population, I am taking BSE as a representative because you see the entire demographic population, if I have to talk what their investments are, I would not know.
No, I'm talking about the age bracket. How many of them are, say, early 20s who are just starting their career?
So I can give you this data, around 30% by 2030 will be in the age group of 20 to 30.
Okay, 30%.
30%. Around 69% by 2030 will be the age of 20 to 65. So to put it this way, 20 to 65, which is called as income earning age, there will be around 68 to 69%, of which around half of it is very young, between 20 to 30. That is the demographic profile of this country.
Okay. And what's your message to them who are investing for the first time?
So there are two messages that I will give for them. One is, don't trade what you do not understand. What you understand, only that you trade. This is the first message. It's very clear. You trade what you understand what you have traded. If it is post-trade also, you should be keeping on understanding. That's the first message. The second message is, you are the think tank of this country. Your brain power is far superior. Fortunately for you, what we observe from you is, you are capable of out-of-the-box thinking. We are conditioned minds. We think certain things as necessity for any thought process. You are unconditioned. You are unlimited. So with your unlimited, unconditioned thought process and your brain power, surely you can be great entrepreneurs of this country. Today there are lots of ways in which you will be able to raise capital. Compared to the days of mine, when I was a young boy, to get 5 rupees would have been difficult. Today you have that opportunity. Don't miss this. Don't let your entrepreneurial skills be killed with any limited, bound thought process. Fly, and you will fly very high. That would be my message.
Oh, that's brilliantly put. Believe in India and believe in your entrepreneurial skills. That's well put. The other thing that I wanted to talk to you about was, I remember seeing my father. He used to invest once in a while. At that time, the brokerage used to be 2%. They used to be, you won't have the mobile, or you can just punch in the order. You would have to go to the broker's office, tell him that, okay, buy this share for me. Now the youth has the app available. They can swipe in, swipe out. Brokerage is practically down to zero. There's of course securities transaction tax, but the costs have come down a lot. Is that sort of leading to some kind of over trading? And do you think that's a bit of a worry going forward?
So let me put it this way. It is just not the brokerage coming down was an important factor. But by and large, there are a good amount of frictional costs today, if you look at it. Notwithstanding, the trading is going up. Whether it is over trading or not, we will come in a minute. One of the major reasons for the trading to pick up was the transparency in the trade process. Let's assume I am a British citizen. Let's assume I want to buy British Telecom 10 shares. I'll go to say Robinhood or somebody, some broker, and tell, please buy for me 10 British Telecom stock. He will quote me a price, I will pay, and he will give me a parchi telling that he has got delivery of it and he is holding in his omnibus depository account. I cannot hold a depository account. Maybe it has not happened in Britain or any other. I am just taking Britain, not I am trying to single out a country. Maybe such brokers have not run overnight away. Presume he runs overnight away. What I have as a parchi is a parchi. We don't even know whether it was internalized at his office, my order, or was it bought in a dark pool, or was it taken to the exchange? Because exchanges claim in Europe around 10 to 15% of the market volume is what is coming to the exchange. In India, we would have called the balance 85% as dabba. They don't have it. They call it as acceptable legal measure. So in which situation, what was the bid, what was the ask, what was the price at which the order was placed, what was the order time, what was the trade time, the capability to fall back to protect me in case the intermediary runs away, it's all Indian. It's all a great Indian innovation. That's what has made the volumes to grow up. The trust, the transparency has been one of the major important factors in bringing in liquidity. There is generally no over trading, you can say, because all trading are not going to result in delivery volumes. So there are three types of participants in the market. People who take a directional view. The directional view people, some people call them as speculators, some people call them as scalpers, some people call them as gamblers. It's all dependent upon the time limit for which they hold the underlying. Time in itself has lost its significance and has changed its meaning. When I was a young man, the capital gains, long-term capital gain was 5 years. Then it became 3 years. Today it is 1 year. I used to get to see profit and loss accounts of companies once in a year, if at all I get to see. Today every quarter, willy-nilly, every company gives me a capability to peek into their account book and see what is happening. So in such a situation, when more trading happens, generally all of us get a fear of height. Then we start trading and questioning ourselves, is it okay? Is it the right number? But as we saw, for a UCC of 15 crores, 1.25 crore trading, I'm not sure whether it is over trading. Maybe more and more people should come in, more and more mutual funds should come in.
Okay, absolutely. How many of you, while working, do open your mobile and punch in a trade here or there? Okay, that's a good number. Okay, one other topic, technology, and within that, artificial intelligence. I'm sure almost all of you would have seen all these videos where I think I am seen promoting stocks or crypto, or Sundar sir is seen promoting, Ashish Chauhan is seen promoting, or some big celebrities. That day I saw even Mukesh Ambani, saying that I have joined a WhatsApp group and I am getting great stock calls. I think you would have seen a lot of such videos, right? Right now, that AI is not perfect, but it's a matter of time before it will be perfect. And I think, of course, to safeguard myself, for example, I've already filed a lot of FIRs that none of these is me, because you never know when someone wakes up and says that, okay, I invested on your behalf. Is technology going to be a bit of a threat or a bit of a disruptor to the investing world?
So I used to tell this very often. Every problem has a solution. So we all should be happy? No. Every solution brings a new paradigm of problems. When you didn't have technology, 2 hours of trading for around 200 crores of rupees as turnover used to happen. Just one day somebody came, used technology to disrupt it, and then suddenly the volume started picking up and people from everywhere started trading. With technology started coming technology glitches. Now it is, and then people improvise their technology. Now AI and machine learning and whatnot, and capability to go into your bank account and remove the money without you knowing. Frauds will happen, and people will perfect probably. At some point of time you will find, as if like me talking here, maybe somebody will make a video where as if I am talking and I am recommending stocks.
Yes.
It will happen. It will become perfect. So what does that mean? There are 2-3 things, and we have to find some way to avoid it. That is one another innovation that will come. And second, for the larger public is, don't believe what you see. Don't believe what you hear. Believe only what you feel as correct after your own analysis. You are an empowered person. You have every samagri for analysis. You have been provided brain, you have been provided by data. Why are you thinking you are an inferior human being that you have to depend on what somebody else tells? Are you so inferior? Are you not much more brainier than your neighbor? Why do you want to depend on somebody like my face look-alike telling you what you should invest? You know what you should invest. You are the master of your money. Don't believe. Believe what you have analyzed and found out was correct. Then you can never be wrong. Then none of these videos can cause any damage to you.
Okay, that's a good point to end. Then believe in yourself, believe in what you're doing. And Sundar sir, thank you so much for your time. We could have continued this conversation, but our time's up. Thank you to the organizers. Thank you so much.